So gold just hit an all-time high, yet everyone is still talking about Bitcoin. But here's the thing, gold and Bitcoin aren't really competitors. They serve very different purposes, have distinct characteristics, and may even both belong in a well-balanced portfolio. It's a bit like comparing Apple to Coca-Cola. Both are major stocks, but they do very different things. So in this video, I'll walk you through why gold's price has surged recently, the role gold can play in your portfolio, the best way to invest in gold without having to store it under your bed, and finally, my personal take why I don't own gold, but I completely understand why some people do. So gold has been one of the best performing assets recently, even though all the hype seems to be around Bitcoin. So here are some of the main reasons why gold has been rallying so hard in recent times. Now, first of all, economic uncertainty and inflation concerns. With inflation staying high for so long, many investors are looking for assets that preserve the purchasing power, and gold has historically played that role. Rising costs of living, higher interest rates, and unstable markets make people seek safe havens. Number two, central banks keep on buying gold. Countries like China, Russia are reducing their reliance on the US dollar and instead are increasing their gold reserves. This massive institutional buying puts upward pressure on gold prices. Thirdly, geographical instability. Global conflicts, trade wars, and unstable governments drive the demand for gold as an independent store of value. Gold often performs very well in times of crisis. Fourthly, weakening trust in fiat currencies such as dollars, euros, pounds. When governments print more and more money, the value of paper currency goes down. People turn to hard assets like gold to protect their wealth. The US dollar's dominance is being questioned and some countries are exploring alternatives. And the fifth point is the supply constraints. Mining production has slowed down, leading to tighter gold supply. It's becoming harder and more expensive to mine new gold, meaning the demand will continue to outpace supply, which in turn will continue to drive the price up higher. And lastly, let's not forget about the Trump factor. All that unpredictability certainly gets people moving into more safe haven assets like gold. This all makes sense, right? But here's the thing. Bitcoin has also been seen as a hedge against inflation and a store of value. People may choose one over the other, but ultimately for me, I always like to look at historical returns to see how the various assets did. So let's do just that. Jump over and have a look how gold performed versus Bitcoin and the S&P 500. Right, so here we are inside TradingView. You can see over here the three different lines. Number one is SPX, that's the S&P 500, returns over 1 year period. We have Bitcoin performance over 1 year period. And at the top, surprisingly, for me at least when I saw those numbers, is actually gold, IGLN, which is the iShares Physical Metals Gold ETF. And you might be as surprised as me that actually gold over 1 year period at least outperformed both the other assets, which was very surprising. And yeah, even more when I go to year to date since the beginning of the year, since of course we know Trump came into power and a lot of uncertainty was created around the world. Well, that also played into the card of gold because yeah, you can see it's up almost 14% versus the other two assets being down, Bitcoin down and S&P 500 being down. So yeah, if you look at that, that really makes a case for having some gold in your portfolio, right? But of course, if I zoom out further, like a 5-year period, that changes things up a little bit, right? Then obviously we have a massive outperformance of Bitcoin, right? The earlier got in, you reaped the higher benefits. But then even here between the S&P 500 and gold, I mean, still gold for a boring, commodity that just lays around still did comparatively well, yet it was still outperformed by almost 50% by S&P 500. And then the further I zoom out over here to another few years, obviously it will be more and more dramatic. Obviously, we come to the same conclusion with Bitcoin outperforming everything, then followed by S&P 500 and then gold. But still, even over a longer period, gold has been holding up really well. And yeah, as I said before, especially in times of crisis and difficulty where people are worried, they often flee and flock to gold. And that makes a good case to have maybe some of it in a well-diversified portfolio. And when we look at the biggest assets in the world, well, guess what? Gold is still leading the pack by far with a market cap now of over $20 trillion. I mean, unbelievable numbers. That's basically all the gold supply in circulation times the price of gold. It's kind of an estimation, of course. Nobody knows exactly how much gold is there, but of the recorded gold. And then Apple, the most valuable company in the world right now, is only at 3.2 trillion. So quite a big difference. And when we compare gold to Bitcoin, Bitcoin is less than 1/10 of the value of gold at only $1.6 trillion currently, following the recent drop in prices for Bitcoin and other cryptocurrencies. So yeah, that's just something also to keep in mind, how much money and value is already locked up in gold worldwide. So looking at those results, is gold better than Bitcoin, or is Bitcoin better than gold? To be honest, I think that's the wrong question. It's not about which one is better. They are very different. Think of it like this. Gold is historically a store of value, trusted for thousands of years, while Bitcoin is a new form of digital asset built for the digital world. Gold is tangible. Bitcoin is not. Gold has a long history of stability. Bitcoin is still relatively young and volatile. Gold is physical and hard to move, while Bitcoin is highly liquid and borderless. You can move and transact anytime you wish. Gold can be used in industries, jewelry, tech. Bitcoin is purely financial. Gold is controlled by governments and central banks, while Bitcoin is decentralized. So both assets may play a role in a well-diversified portfolio, just in different ways. Some people may want the reliability of gold, while others see Bitcoin as a revolutionary financial system. Let's talk about how gold fits into a portfolio. So let's say you're considering adding some gold to your portfolio. How much should you be allocating? Now, obviously, that very much depends on each individual investor, but for conservative investors, people say anywhere from 5 to 10% in gold as a hedge against economic uncertainty. For more aggressive investors, 0 to 5%, if any, depending on their beliefs on other asset classes like Bitcoin and stocks. And if you already hold Bitcoin, you might argue you don't even need gold at all. Or maybe you just want a small allocation just in case Bitcoin turns out to be riskier than expected. Gold really can act as a stabilizer when the stock market crashes. It doesn't generate income, but it does hold value over time, especially during times of uncertainty and recessions. Again, it's all about personal strategy. Right, but let's assume you plan to add some gold to your portfolio. What's the best way to actually buy it and hold it? So holding physical gold is cool in theory. In real life, it comes with its own set of challenges such as storage, security, and liquidity issues. Luckily, there are easier ways to gain exposure to gold. The first one, and one of the most popular ways to do so, is through gold ETFs. Just as you would buy, for example, S&P 500 ETF or Nasdaq 100 ETF, you can buy a gold ETF or ETC, exchange traded commodity. Now, what's the difference? In line with the UCITS regulations, apparently it's not allowed to have a gold ETF, so therefore they call it ETC in Europe and other parts, exchange traded commodity. So that's just a technical term, but pretty much think of it in similar ways. And here you can see different ETCs that you can buy, but I always like to look at the largest by fund size, which currently has 15.8 billion pounds under management, and that's of course as always from iShares, which is BlackRock, which just gives confidence, being one of the biggest, if not the biggest money manager in the world. Let's click into this, and you see here right away the expense ratio, similar like you would have with any other ETF, is 0.12%, and that obviously takes care of all the storing, buying, insurance on the gold. So that's basically a price you pay to BlackRock for safeguarding your gold with them. Basically, distribution policy says accumulating, but obviously there is no dividends that you're going to be getting from your gold. It's physical, which is good to actually buy the gold. It's not some synthetic version of it. And you see the fund size here once again. So yeah, that's basically one of the biggest ETFs or ETCs that you can currently buy. And you can also go on the stock exchange here and see the various ticker symbols where you can buy that. So for example, if you wanted to buy this ETC in euros, you could go to London Stock Exchange, then just take this ticker symbol over here, copy it, go, for example, into Trading 212 or any other stockbroker of your choice, and then just look it up, and most of them will have it. Yeah, if I copy it into here, you see iShares physical gold replicating. I can go into this, and then, yeah, I see the price in euros. They also have it obviously in dollars. If you wanted to buy in dollars, you would then take, IGLN and paste it in here, and you could buy it in dollars. Go ahead, click on buy, say how much you want, and boom, that's how easy you buy your first bit of gold, right? So you wouldn't have it physically, but you would basically buy the ETC like a fund that replicates the price of gold. So you would have the same price benefits without having to personally, look after storage and so forth. And if you haven't tried out Trading 212 yet, it's a great stockbroker that I use myself and can only recommend. And if you want to sign up to it, definitely use my link down in the description below, and you can get a free share valued up to 100 euros. The second way how I can get exposure to gold is through gold mining stocks, companies that mine gold. This is riskier because you're exposed to both the gold price and the company performance. So for example, one very famous company is actually the ticker symbol GOLD, Barrick Gold Corporation. They're miners, and yeah, over 1 year period, they've done really well. Year to date, also really well. But then again, over a 5 year period, actually not that well, really underperformed gold. And that's why I said here it's more risky because yes, obviously they're following the gold price, but in case the company was mismanaged or something happened, you would also have that factored into the price. So that will probably be my least desirable way to get gold exposure, by investing into a single gold mining company. It's the equivalent of investing into Coinbase, for example, as a stock and company, if you wanted to get exposure into cryptocurrency or Bitcoin without actually owning crypto yourself. One way to do it, but maybe not the best. Another way is through gold-backed stablecoins, digital versions of gold like PAXG, which allow you to own gold on the blockchain. Well, you see this over here when we are inside CoinMarketCap, PAX Gold, currently the 91st biggest cryptocurrency out there. And you can see that price basically follows, almost like a stable coin, the price of gold, right? Where the stable coin of a US dollar is basically 1-to-1, so it always stays at 1. Here it follows directly the price of gold, at least that's the idea, and it really does so very well. It follows the price over longer periods, so you can really have exposure to it without owning the physical gold. You can buy it on big exchanges like, for example, Binance or BitGet, Kraken, KuCoin. So many of the big exchanges will offer you PAX gold, so that could be a good way for you to have exposure to it. And of course, from here you could take it off the exchange onto your hardware wallet. So then on the little stick, you would own your gold basically, instead of having, a lot of physical gold under your pillow. And lastly, let's talk about buying physical gold. I know actually some investors who do hold small gold coins instead of large gold bars. And their biggest advice, do buy coins. Coins are just much easier to sell, easier to transport, and much more practical in case you ever need to liquidate a portion of your gold holding. Some of the best coins to consider are Maple Leafs, Krugerrands, Pandas, Napoleons, and Venus. Here you really know what you're getting, and these are verified coins of real gold. Definitely avoid unverified gold like soup gold that you buy on some markets around the world. Also, spread is key when you buy gold. And if you accumulate a significant amount of gold, definitely consider storing it in a safe box at your local bank rather than relying on third-party platforms. And if your gold holdings do increase a lot in value and become a significant amount of your portfolio, then really it might make sense to invest into such a storage rather than just keeping it at home in your safe box, because things do happen, unfortunately. Personally, I've never been a big fan of gold, but I gotta say, looking at those prices in recent times, really gold has done rather well, and surprisingly so, and it might continue going forward to do very well. I wouldn't be surprised. Still, personally, I'm not a fan of it, and I'm not seeing myself adding it to my portfolio anytime soon. There are also many other great companies I would love to own, but I can't own everything. I only have so much money to invest, and I really want to focus on a core holding, and that's my 3-pillar strategy, which consists of real estate, Bitcoin, and ETFs. And now I started adding a couple of individual companies as well. So right now I just don't see space for gold in my portfolio, but hey, who knows, maybe in 5-10 years I might change my mind. But at the same time, I totally get the appeal of gold for some investors, and I totally get why you might want to have some exposure to gold in your portfolio. And if you want to discuss this more and get insights into investing strategies, then join the Smart Money Club, totally free of charge. You find the link down in the description below. I'm excited to see you on the inside. So what do you think about it? Does gold still have a place in modern investing, or is Bitcoin the future? Let me know in the comments. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.